Today, we're diving into a market that's in absolute turmoil. You see, Korea's used car export industry, which is a global powerhouse, has just been slammed by a geopolitical storm. It's sending massive shockwaves through the entire system. But as you're about to see, this story of crisis, well, it's got some incredibly surprising twists. So here's how we're going to break it all down. First, we'll unpack the sheer scale of this collapse. Then, we'll trace it all back to a single critical choke point and see how that fallout is hitting the market back home. After that, we're going to pivot to a totally unexpected silver lining before asking, what does this all mean for the future? All right, let's get right into it. To really understand what's happening, you have to start with the raw numbers, and honestly, they are absolutely staggering. I mean, just look at that. In March of 2026, the market plunged by a massive 41.4% compared to the exact same month just 1 year ago. That's not a slowdown. That's like driving off a cliff. And this chart really puts that percentage into perspective. We're talking about going from nearly 79,000 cars exported in March of 2025 all the way down to just over 55,000 this year. More than 23,000 cars just, poof, vanished from the export totals in 12 months. So what on earth could cause a nosedive like that? Well, the answer isn't some simple market trend. It's a huge geopolitical event that basically slammed the emergency brake on a massive part of the industry. Back in late February of 2026, a conflict flared up, and that led to a full blockade of the Strait of Hormuz. Now, for a market that depends so heavily on buyers in the Middle East, shutting down this shipping lane, it's like cutting off a main artery. And you can see the impact with almost surgical precision here. The blockade didn't just slow things down, it brought trade to a dead stop. Key markets like the UAE and Iraq saw their imports just evaporate. We're talking drops of over 90%. 90%! Let's just zoom in on the UAE for a second. It's the central hub, right? It's where cars land before being sent all over the region. Seeing its numbers fall from almost 5,000 cars to less than 500, that is nothing short of a catastrophe for any exporter who built their business on that route. And of course, a crisis like this doesn't just stay overseas. It has immediate and really severe consequences right back home in Korea. This isn't just some problem happening on the high seas. It's being felt right in the domestic auto market. Think about it. With that main export tap shut off, all the cars that were supposed to go to the Middle East are now flooding the local auctions. So supply is way up, but the demand just isn't there. And the result? Auction success rates, that's the percentage of cars that actually get sold, have plummeted to historic lows, even dipping below 50%. And it's not just the nice, drivable cars either. Even the scrap industry is taking a massive hit. The share of old, end-of-life vehicles being exported has just cratered, down to only 5.2%, the lowest it's been in years. The basic math of shipping these cheaper cars just doesn't make any sense right now. Okay, so I know, so far the picture has been pretty bleak, right? But this is where the whole story takes a really fascinating turn. Because while one massive part of the market was completely collapsing, another, totally different region started to boom. Just take a look at Russia. Everyone expected new taxes and regulations to slow things down, but instead, demand suddenly went through the roof. Exports jumped by a crazy 41% from February to March. And that exact same trend is mirrored almost perfectly in Kyrgyzstan. As a key transit country for cars heading into Russia, it saw a 42% spike in imports from Korea in the exact same timeframe. That is definitely not a coincidence. And right next door, Kazakhstan saw a similar jump of 32%. You can see it, right? A really clear pattern is forming across all of Central Asia. So you have to ask the obvious question. Why? Why is this happening? While the Middle East is paralyzed, what's lighting a fire under the Central Asian route? So here's the thing. It's not just one factor. It's this perfect storm of persistent Russian demand, these neighboring countries being used as clever logistical hubs, and some incredibly savvy exporters. These guys are adapting on the fly, pivoting their entire product mix to focus on lower horsepower cars just so they can get around Russia's new tax laws. They're not just selling cars, they're solving these complex international puzzles in real time. But hold on. The Central Asian boom isn't the only surprise revival we're seeing. There's another market, one that had gone almost completely silent for months, that suddenly roared back to life in a huge way. Look at these numbers for Syria. Shipments going through Turkey went from just a trickle to almost 1,000 units. In direct exports, they exploded from a couple hundred to nearly 2,800. What's really important here is that these aren't just junkers. The average value tells us these are good, solid, higher quality cars. So what we have is a tale of two very different markets. One is in a state of collapse thanks to a blockade, while others are surging because of local demand and some really clever logistics. Let's try to tie this all together and figure out what it means for the big picture. What this crisis has really done is brutally expose the danger of relying too much on one single region and one single shipping route. The Hormuz blockade was a stress test that the market completely failed. And now diversification isn't just a good strategy, it's an absolute necessity for survival. So what are the big lessons from this completely chaotic month? First, that geopolitics can turn your entire business model upside down overnight. Second, building a diverse portfolio of markets is really your only defense. And maybe most importantly, even when things look incredibly dire, new doors can open up where you least expect them. And all of this leaves us with one big question. This has been a really painful, really costly shock to the system, no doubt. But could this forced pivot, this push away from being over-reliant on one single region, could it be the very thing that builds a more robust, adaptable, and ultimately stronger export industry